Financial View, the CIO of GM Financials. Let's talk about Kaynes Technology. That's made a strong debut on the bourses today. The company is listed at a premium of 32%. Vaishta is here with all the details and the important management takeaways.
Hi Reema, thanks for that. Kaynes Technology, as you mentioned, has made a very strong debut today. Listed at a premium of 32% and is coming at 778 rupees per share. It is an electronic system design and manufacturing services company. The customers are across various industry verticals, which includes the likes of automotive, industrial, aerospace and defense, medical, railways, consumer, IoT, IT, etc. The issue size of the IPO is 858 crores. With the fresh issue of 530 crores and the rest comes from the offer for sale. The promoter holding current pre-issue was at 80% approximately and post-issue comes in at 63%. The proceeds of the fresh issue are expected to be utilized for investment in a subsidiary for repayment of debt, working capital requirements, also for capex at their existing manufacturing facilities. We hosted the management on our channel today morning and they said that the FY23 revenue guidance is coming at 1200 crores. FY22 revenues were at 706 crores, so that is a major jump. FY25 EBITDA margins are targeted at 14.5%. FY22 margins were at 13.3%, so there's a jump there as well. Also, medical electronics is a focus area for the company as it is a margin accretive business. Aerospace, defense, outer space and nuclear segment will contribute 8 to 10% of the revenues for the company by FY25, which currently is at 3%. Also, China-Taiwan war could be a major threat for the growth prospects of the company as 10% of the total raw materials are sourced from China and most of the processes are made in Taiwan. Back to you.
Okay, thanks a lot for that. Well, Paytm is really the stock of the moment. There's a huge supply overhang that's pushed Paytm lower. The stock has hit an all-time low and is now down almost 80% from its issue price. Vivek is here to tell us more about that. Vivek.
Well, Paytm definitely the stock in focus. So a lot of these new age companies actually have seen the expiry of the lock-in period, which basically indicates that, selling as far as anchor investors or pre-IPO investors is concerned is something that can start, and which is what we are seeing across most of these companies. Paytm has not been an exception. The worry of the stock supply is clearly weighing as far as the stock performance is concerned. Remember, the lock-in for Paytm ended on November 15, 2022. Now, in terms of, block deals, SoftBank actually sold close to 2.93 crore shares, at 555 rupees a share. And post this particular block deal, SoftBank continues to hold almost 12.95% stake in the company. However, the caveat is that, SoftBank cannot sell these shares for the further 60 days. However, what's actually weighing down as far as this particular shareholding pattern is concerned is that, there are other companies or there are other shareholders in the stock who actually right now, post the expiry of the lock-in, can sell. And some large shareholders, are the Alibaba group. If you're talking about this particular group, over 31% stake is what they hold as far as Paytm is concerned. Now, just have a look at, the price performance of Paytm since the listing. Stock listed on November 18, 2021. The IPO allotment price was close to 2,150 rupees a share. And today's low indicates that the stock has eroded over 75% of its own stock price as well as the market cap.
Thank you very much for that. This has been the big theme as the lock-ins of these new companies. Recent IPOs have opened up. We have seen intense selling pressure coming through. The latest one, of course, is Paytm. No block deal today, but the stock is down close to by 8%. Get into a break. On the other side, we'll wind down the earnings